Hey, my name is Damaris. I've been trading since 2020. I'm a full-time trader who's been consistently profitable day trading stock options. And everything I do, every setup I take, every opportunity I spot, it all starts with technical analysis. And the first part of technical analysis is understanding candlesticks. Because when you actually understand the language of the market and what the candlesticks are actually telling you, price action starts making sense. This video is not going to be about memorizing candlestick patterns. I'm going to help you understand what candlesticks are actually showing you. I've taught hundreds of students how to simplify their analysis and finally understand price action. Let's get started. The first thing we must discuss is what exactly is a candlestick. A candlestick represents a movement of price during a specific time period. So each candlestick could represent a 1-minute time frame, a 5-minute time frame. One candlestick could even represent an entire day or week or month time frame. So each candlestick tells you what happened during that specific time period. There are 4 parts to every candlestick. The first part we will discuss is the body. The body of the candlestick is the thick rectangle. This represents if price went up or if price went down. Typically on a traditional candlestick chart, you'll see red bodies and green bodies. Red candlesticks represent that the price went down during that specific time frame. That is a bearish candlestick. A green body represents that price went up during that specific time frame. That is a bullish candlestick. So there are multiple other parts of the candlestick as well. We could start with the open. The open is the price where the candle began. So for a red candlestick, the open will be at the top of the body. You could also see the open price for a green candlestick will be opposite. The open price for a green candlestick is at the bottom of the body. The open price represents where price started when the candle began. The reason why candles are green is because price went up. So you could see that represented with the open price being lower than the close price of a green candle. That shows that the price went up during that time frame. When we look at a red candle, you could see that the open price is higher than the close price, representing that price went down. So the other part of the candlestick that we can identify is the close price. The close price is where price ended when the candle finished during that specific time frame. We also have other prices that we could identify on our candlestick, such as the high price. So on a red candlestick and on a green candlestick, the high price is both the highest price it reached during that time period. So it will be the highest wick we see during that time period. We also have the low price. The low price is the lowest price it reached during that time period. So you could notice that a candle has its body and it also has these thin lines, which are called wicks. These thin lines above and below the body represent how far price moved outside of the range within the body before it came back inside the body before it closed. To be more clear, the difference between the body and the wick is that the body is where all the price action happened during that time frame. That's where buyers and sellers were actively agreeing on price. The wicks are places where price moved only temporarily and then price rejected back into the accepted range. Do you ever feel overwhelmed trying to memorize countless candlestick patterns? What if I told you it's not about memorization, but it's about understanding the market story, giving us insights into the battle between buyers and sellers? Every wick, body, and color tells you something about the market's emotions and movements. When you learn to interpret these signals, you can unlock a deeper understanding of price action.
Within the chart, there's something that's called higher highs or higher lows or lower highs or lower lows that form. So that is going to be how you identify market structure and trends. So here, this was the high, and now this is the lower high. So this is the opposite concept of what I previously explained. This is going to be what we call a swing high. So basically, you look to a high point on the chart, and if to the left of that was lower and to the right of that is lower, that's what we call a swing high. So when we break above the previous high, that's a higher high. Now we've identified an uptrending market. So for example, when price breaks above a previous high, that is bullish. So you could make a bullish bet that the stock is going to continue going higher. And after price made that higher high, it continued going higher.
You've probably heard of candlestick patterns. They have names like engulfing, doji, hammer, and these candlestick patterns can be helpful, but what most beginners make a mistake on is that they're not a magic signal. So the big mistake that beginners make is trying to memorize these candlestick patterns without understanding why they form.
So higher highs and higher lows are bullish. And bullish basically means that the market is going up. So higher highs and higher lows, those are both things that are bullish. So for example, here we could put it in green. When we see green on the chart, that is bullish. That means the market's going up. There's another thing which I want you guys to know, which is the opposite, and this is reading bearish price action. So bearish means that the market is going down. So what we see when the market is going down is it's called lower highs, and that abbreviation is LH. So it's the opposite. And then we get lower lows, and that abbreviation is LL.
Small bodies show weakness or indecision or agreement on price. You always want to read your candlesticks in context of the entire chart.
So one thing that's important is when you open a chart, first zoom out. Go to the highest time frame. There's this little magnifying glass down here, like zoom all the way out. And we're going to look at market structure first before we do anything when we open up an empty chart. When we look at a chart, we could get a lot of information. Where are the lows and where are the highs? The reason why I'm pointing this out to you now is because something we want to understand is a concept of highs and lows first. So for example, I'm going to mark them out for you. We could right click on the chart and we can add a drawing and we could add a price level. So first, I'm going to mark the low of the entire chart. So here I double clicked it and I could label it and I could call it low. So here we have the low of the entire chart. Now I could duplicate this drawing and I could also mark off the high of this entire chart. What we're looking at on the entire chart, I could add a left extension and this is going to be the high. So here we have the low, the absolute low marked out, and we have the absolute high marked out. So there's going to be like a max low, which for example, on this chart right now, this is like the max low. This is going to be what we call a swing low, which is basically, it's going to be a low point on the chart where the left candlesticks to that are higher than it, and the right candlesticks to that are higher than that. So it's the lowest point in this swing of a movement. So that's going to be our low.
All right, I know we covered a lot, but this is just the starting point. But what actually makes you profitable is how you combine that knowledge with execution and learning the entire process of trading, starting from understanding candlesticks, identifying your key levels of interest, creating your trading plans, timing your entries, creating an exit strategy, and making sure you're managing your risk. Usually putting this all together is where most traders get stuck. So if you're tired of doing this alone and you want personal one-on-one mentorship and guidance, I personally invite you to join my mentorship community. Click the link in the description. Let me help you build a real system and finally become a consistently profitable trader. Thanks for watching. I'll see you in the next video.